Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's very important topic, very important webinar on key considerations in auditing of auto ancillary industry. As we all are aware that we have covered all the accounting auditing standards, as well as we have covered all the line items of balance sheet, asset side and liability side. Now we have started the various key consideration in various industries. We have covered the healthcare sector. We have also covered the non-profit organization. Today, we are covering the various key consideration in auditing the auto ancillary industry. And in order to tackle this very important topic, we are having with us CA Pranay Gupta ji. So on behalf of AASB of ICI, I welcome you on this very important webinar, Pranay ji. Welcome to you, Pranay ji.
Thank you, Anil.
It is my proud privilege to share with all of you the brief profile of Pranay Gupta ji. Pranay ji is a qualified chartered accountant with enriching experience of more than 15 years. His professional journey of more than a decade and a half comprises of working in industrial and consumer products businesses encompassing companies in various industries sectors such as automobile, diversified industrial products, retail, consumer products, healthcare, hospitality, and another manufacturing. He is currently working as a director with a chartered accountant firm and actively participates in ICAI initiatives. He is also a designated technical reviewer with the FRRB. So now the stage is yours, sir. Without wasting much more time, I request you to please enlighten all of us on various intricacies and consideration in auditing the auto ancillary industry. Over to you, Pranay ji, please.
Thank you, Anil ji. Thank you so much for giving me an opportunity to share my insights around auto ancillary industry. So just to a brief background, I think you've already spoken. So we wanted to be specific, what I understand from AASB, that about specific industry. So this structure, the way we will be discussing today will be restricted only to auto ancillary industry, and whatever auditing consideration we need to keep in mind while we audit an auto ancillary industry, right? So this is how I've tried to structure the presentation today. So we will understand what an auto ancillary industry looks like, what is exactly they do. Materiality consideration when we are auditing an auto ancillary industry, anything specific that we need to consider. Risk around auto ancillary industry, very important topic, because this will form the basis of our discussion today. Linked to this, how we identify the significant processes that are there in an auto ancillary industry and how they impact our audit. Some of the specific auditing procedures that are there for an auto ancillary industry, considering their specific risk, specific I would say accounting treatments that are being done in an auto ancillary industry. So I would try to bring out my experience in here. How do we audit? What are the basic challenges, key risk? What are the unique activities in an auto kind of a setup wherein we need to perform specific auditing procedures in and around the challenges that are there, the risks that are there in an auto industry. Some of the key estimates that are used in an auto ancillary industry, and finally the reporting considerations, how the other big players in an auto ancillary industry have reported during their preparing their audit reports, maybe main audit report or the key audit matters that are there they have reported. So this is the broad, I would say, the agenda that we'll be discussing in next 2 hours. So moving ahead, so the most important thing whenever we begin any audit is to understand what the industry does. And to understand what an industry does, so we need to understand how this is structured. So principally auto industry, if somebody wants to do an audit of an auto industry, it is principally divided into 3, I would say, segments. One is the vehicle manufacturer, the OEMs, or the original equipment manufacturer, what we call them. So the industry is starts from here, and they have got 2 subsets. One is the automobile component manufacturer or the auto ancillary, for which we will be talking today, and another is one is the aftermarket. So all the 3 put together are umbrella under the auto industries, and sometimes aftermarket is being done by the auto component manufacturer only, but it is a subset of automobile component manufacturer. But sometimes it is because of the restriction caused by the OEMs not to enter into aftermarket. There are separate specific players in aftermarket only. So these are the 3 umbrellas. And if we go further in detail with respect to the automobile component manufacturer or the auto ancillary industry, So they do manufacture each and every, whatever you see. So vehicle manufacturer mostly in India or global would be doing an assembly of the vehicles. Most of the parts that goes into a car or a two-wheeler or a three-wheeler or a off-roader will be manufactured by a automobile vendor or a supplier that is housed in auto ancillary. So be it an engine parts, transmission and steering parts, suspension and braking systems, equipments, electrical parts, and others. All these, each and everything, whatever you can imagine in an auto, goes through a subset supplier called an auto ancillary that would be there. Mostly, the vehicle manufacturer keeps the R&D with themselves, or the manufacturing of the chassis or the main parts of the engines, but most of the items are supplied by the auto ancillary. So it becomes their growth, their risk goes hand in hand with the vehicle manufacturer. So it becomes all the more very, very important for auto industry to understand how these the auto ancillary functions, and how these auto ancillaries actually faces the challenge, and how these are being reported by these companies. Moving ahead, just to give you a broader perspective, going deeper into the auto ancillary sector. So these are the components that are being, to give you an example, for example, we spoke about, if you go to the previous slide, these were the 6 segments that are there. And within those 6 segments, these are the products that are being manufactured by an auto ancillary. So you can imagine the headlights, the wiring and harness that goes into the car, the seating system, the steering systems, the gears, generators, the ignition systems, everything is being manufactured by a auto ancillary. Now, auto ancillaries can be dedicated to a specific product in one of those, or maybe a combination of all these products. So you'll have to, when you are auditing an auto ancillary, you'll have to understand which products they are manufacturing, and which car they are manufacturing, what are the customers they are catering to. So these are the typically what I have seen in my experience. The bigger players may be entering into most of the products that are being required for manufacturing a car or a two-wheeler or a three-wheeler, but there are, on a smaller or a medium scale, auto ancillaries would be manufacturing only 1 or 2 products, specifically in that for 1 or 2 cars or models, or particularly 1 or 2 customers only. So this is a very interesting kind of an industry wherein the manufacturers themselves cater only to a few customers and a few models only. So their horizon is very restricted to a specific only 1 or 2 products, unlike very large players that enter into most of the products that would be there. I'll just pause on every slide so that you can digest what I'm trying to say. Can I have a glance at it and we can move ahead in that case? Yeah. So while we build on the discussion on understanding the auto ancillary industry, why it is important while we do an audit. So in current scenario where an audit has gained a lot more significance and attention from public at large, when people look upon us for trust. So this has become very, very important for us to, as an auditors, to understand the audit and perform a risk-based audit. When I say risk-based audit, means we understand what is the entity's organizational structure, ownership, governance. What is the business model that entity has adopted? What are the entity's strategic directions by how it is leading the business? What industry in which it is operating, the regulatory environment impacting the industry, other external factors that might be impacting the industry and which might have an indirect impact on the financial reporting of that enterprise, or us as an auditor when we are auditing that industry. The relevant measure used to assess the entity's financial performance. So there would be some KPIs, so key performance indicators relevant to a particular industry, like ROS is there, or return on capital employed, or the profit indicators, or the revenue indicators, based on which the people assess the performance of a particular company. The applicable financial reporting framework, whether they are following an Indian GAAP or Ind AS, or they have a global operations wherein they have companies outside India which are reporting in different GAPs. Applicable, the nature and extent of the related party transactions. Now, in an auto ancillary kind of a setup, Mostly, these have grown through an inorganic growth by way of an acquisitions, mergers. So you will find a very large kind of a structure wherein there would be companies housed within an auto ancillary group. Maybe in India, outside India, you need to understand what the transactions that are happening between these companies. So this is of great importance when you're auditing a auto ancillary industry. Similarly, entities' ability to continue as a going concern. Now, these auto ancillary sector, you'll understand when we move ahead during the discussion today. So these auto ancillaries cater to few specific customers. Now, when a company is catering only to few specific customers, and those customers, for example, I'm manufacturing a steering system for Maruti. Now, Maruti versus me, Maruti would be a very big player, a very big player. Now, for a player like OEMs, where the size of the OEMs will always be bigger and very large as compared to the auto ancillary. So they are the governing, or they are the directing parties. The pricing and everything, the technology, pricing, the timing, everything is driven by these big players. So these auto ancillaries face a greater amount of challenges in decision making on the getting the right price. So they are very everything. They are not, I would say, the price fixer. The price fixer is by the OEMs only. So they are left with very less margin. So and they work on, as you understand, and you know, in an auto kind of industry, they work on a just-in-time kind of an inventory. So to manage right level of inventories all the times, not to have a significant blockages in working capital, becomes a very important exercise in a auto ancillary kind of an industry. Having said that, if they have to manage their working capital well, they will have to have a debt equity portion very well. If they are not able to maintain a debt equity portion or at an optimum level, they might end up becoming a highly indebted company, and risk on their going concern may be on a higher side. So you'll have to understand all these 8-9 things when you're understanding in any industry, and specific to auto. Again, we'll move in the next slides how these auto industry, like, so whenever you are starting an audit, just keep your focus on performing a risk-based audit. And when we focus on understanding on the business, on matters that are most important to the entity and our audit, our understanding of the business helps us to identify the risk of material misstatement that might be there in the financial statements. And once we identify the risk of material misstatement, risk of material misstatement are the things that might go wrong in the financial statements. So if we are able to identify those things, we can identify and design procedures around it, and perform I think an effective an audit where our audit risk is minimal. So these are the things that are very important when we start an audit. I'll pause here and then move ahead. So moving ahead, so what do you mean by understanding the business? Like I said, these are the 8-9 things. We understand the organization structure, the business model, the regulatory environment. So why we understand this is so that we are able to perform a risk-based audit. And when I say a risk-based audit, I'll give you an example. For example, XYZ is an auto ancillary, and they are supplying the entire production to Bajaj, for example. And Bajaj has reported a decline in sales for XYZ reasons in Q1. Maybe because of there was a lockdown in Q1 of 2020 or 2021. Both time there was a lockdown, so there was a significant decline in the revenues of all the OEMs. So if you are supplying to Bajaj, their sales have gone down. It would be, I would say, imperative that or it would be assumed that when you are auto ancillary, your sale will also go down, because it's linked. When they will sell, they will produce, and they will be dependent upon you to supply them the whatever part that you are manufacturing. For example, you are manufacturing the handlebar assembly for the motorcycle that Bajaj manufactures. So if the production for the Bajaj Pulsar has gone down, so the production for your handlebar assembly for Bajaj will also go down, and similarly the sales of your company will also go down. So you'll have to understand what are the key customers you are catering to, how the market is performing during a particular quarter. And auto industry is very There are organizations which provide all the more data of the expected sales, the actual sales in the secondary market and in the primary market. So you can be very easily able to set out expectation when you are starting an audit. What do you expect for an auto ancillary? The sales will go up or sales will go down. How should the profitability be like? So to understand this, there are various websites like ACMA is there, wherein you will get a lot of data about how the auto industry has performed during a particular period or a quarter. So if you see on the slide, the automobile sector for FY22 reported a sales of $56 billion. That is close to 420,000 crores between the April 21 to March 22. And there's a growth of almost 23% vis-a-vis if you see last 4-5 years of growth. And if you see on the right-hand side, on the breakup of the sale of an auto ancillary industry, it's about 81% that comes from the OEM supplies. That is the domestic OEM supplies that we are talking of. There's 17% of aftermarket. Aftermarket is the replacement market. So if you want to replace your headlights, if it is broken, you have to go to the once you have bought the vehicle, then you'll have to go to the dealer and or the shop in the local market and buy it from there. So that's called an aftermarket replacement of the goods that were supplied initially at the time of sale of the car. And then you have exports. So this is how the entire industry is structured. And if you see, exports have grown by 76%. Now, when you audit an auto ancillary industry, there might be some ancillaries which are dependent on exports, some which may be dependent on domestic suppliers. So you'll have to understand what company that you're auditing, how much they are exporting, how much they are supplying it to the domestic players, how the market has performed in a particular period of a quarter, and vis-a-vis how your company is likely to expect to perform. So you'll be able to design your procedures, make extended procedures if your expectations is deviating from the actual result. So this is how you need to initiate your audit. So just to give you a further flavor, what an auto ancillary looks like. So once we have understood that how much is the size, what is the major markets that is service, within these major markets, there are three principal types of further segments, two-wheeler segments. Then you have got the passenger vehicles and then the three-wheelers. So this is within the domestic market share, and within this, if you further disaggregate this data, you'll have passenger vehicles, two-wheelers, medium and heavy commercial vehicles, light commercial vehicles, tractors, three-wheelers, construction, earth-moving equipment. So this is, and within these vehicles, there would be thousands of auto components that would be procured from an auto ancillary. So you'll have to understand what is the particular market segment that your auto ancillary is servicing and how that market is performing. So you'll have to disaggregate or deep dive into an auto ancillary kind of a set to understand well what your company is performing, producing, to whom it is catering to, which are the markets that it is catering to, which are the customer profiles that is catering. So that you'll be able to do a good analysis around it and perform your audit procedures well in that case. Moving ahead, so once we understand the industry, so I'm not giving you a much deeper analysis, but just giving you a flavor how it is done, so that when you go and audit an auto ancillary industry, you understand what are the products, how much deeper you need to go. And further, similarly, now I'm linking it back to the audit. When you audit, so I'll just skip on this slide and go to this. So there are many, I would say, initiatives done by government to promote this industry. So this industry was facing a great amount of challenge during COVID, when COVID started. This being driven by the consumer spending, so it was badly hit during 2020, 2021. It started recovering in 2022. It has performed well. Now during this period, the government came up with many initiatives and to support the industry and to drive the growth, because this auto ancillary itself contributes to 2.3% of the total GDP. So you can understand the importance of this industry, and to support this industry so the growth happens. So they brought in various incentives, like there was a PLI scheme that government came, and this extended PLI given to automobile industry will drive the production, because there's a great amount of incentive that is sitting in this industry. Similarly, other schemes that the government launched was FAME scheme, automotive emissions, and NHREP department. There were schemes launched by Department of Heavy Industries and Public Enterprise. Now, why it is important to understand the regulatory environment around this is because when you go and audit an auto ancillary industry, these subsidies, these incentives would be sitting in these, would be impacting their financial statements. So you'll have to understand when these will get recorded, at what amount will these get recorded, and what would be the disclosures in the financial statement that would be given by the company and that you need to audit. So you'll have to understand and ensure all these have been accounted and reported appropriately in the financial statements. So you need to be aware what are the schemes that has been or the initiatives that have been taken by the government, whether your company has eligible, they have received the eligibility certificates, or they have applied as of now. So all these things you'll have to keep in mind when you are auditing an auto ancillary industry. So these are again the initiatives that were taken by the government to boost the sales. So I'll just pause here to summarize what we understood. So, from the again, when we initiate an audit, and that is applicable to all the industry, we have to understand the business. So specifically to an auto sector, we'll have to understand the key customers, because there will be only few customers. We'll have to understand the how the organization is structured, whether there are a lot of what is the debt equity ratio, what is the further vendors from which this auto ancillary is buying, what are the factors, how the auto industry is performing vis-a-vis your company ancillary is performing, what are the segments, product segments, market segment that it's catering to. So you have to understand and design your audit procedures based on the understanding of the business. Now, moving ahead, so once you understand the business, then the two streams that goes out of it is, once you establish your materiality, because once you understand the business, you'll have to understand the focus of the users of the financial statements. What is the focus of the stakeholders of the company on the with respect to the company's business? So when this COVID happened, specifically in 2020 and the wave 2 in 2021, most of the auto component suppliers were very concerned about the growth, or to growth of the revenue, I would say, or to reach a level that was there before the pre-COVID era. So once you understand the business, the key challenges that they faced, what are the initiatives to drive the growth. So you'll understand by discussing with the management or the board of directors how the company, how the stakeholders are focusing the company right now. So you'll have to identify a benchmark to establish a materiality, because materiality involves a lot of exercise of your professional judgment. So it is whenever you are initiating an audit, you'll have to set out a materiality, and materiality is often is a percentage of a chosen benchmark. Now, when I say a benchmark, it may be profit before tax, or it may be revenue, it may be gross profit, total expenses. So you'll have to understand what is the benchmark, what are the factors that is based on which benchmark needs to be established. So this might include the elements within the financial statements, whether there are items on which attention of the users of the particular entity's financial statements tend to be focused. For example, I said in post-COVID era, most of the companies in auto ancillary industry were focused to drive their revenues so that they are able to reach back to the pre-COVID era. And if you go back and see to my slide on the revenue growth in this sector, you'll see in FY20 it fell to $49 billion, and in FY22 it rose to $56 billion. That was almost pre-COVID era if you see FY19. So most of the focus was restricted to this. So when you are establishing your materiality, you'll have to see how how the focus is there on the financial statements, nature of the entity, its life cycle. All these are the factors that you need to consider. And again, the materiality is of two types. One is the overall materiality, and another one is the performance materiality. Once you and so performance materiality, if you whenever you are auditing, performance materiality is basically at the financial statement account level. For example, debtor is there, and uh, with respect to the financial statement as a whole, if something is material or not, you need to you'll have to establish an overall materiality. I'll just pause here. So you may link it back whenever you're auditing. So probably you are doing it in all your audits, but this is how to be very specific about the auto ancillary industry. So you'll have to understand what is the focus of the investors or the users of the financial statements. So moving ahead with respect to, once you understand the business, set out the materiality, and while you understand the business, you'll have to identify risk. Because if you go back and look at my slide, so I started with saying considering the current environment in which we are operating as auditors. So there's a lot of focus, a lot of ask from the stakeholders, because we are serving to public at large. So public at large sees us as a trust advisors, or the where people can trust us when we are signing an account. So we need to identify, we need to perform a risk-based audit, wherein we are able to perform adequate and appropriate audit procedures to mitigate our audit risk to the minimal level. So to reach to that level, so we need to understand the business and identify the risk that might be there for a material misstatement in a particular industry in which you're auditing. So if we see, so I've tried to bring, based on my experience, what could be a risk in a auto ancillary kind of a setup. So if you can be with me and see what in the initial slides we discussed what an auto ancillary produces and for whom they produces. Considering those factors, if we go through this slide, you'll be able to correlate what kind of risk that might be there in a auto ancillary kind of a setup, and what are the accounts that it may impact. And once you identify these accounts it may get impacted by these risks, you'll have to design additional procedures to mitigate those risks. And we'll discuss about what additional procedures that might be there in the subsequent slides to come. So if you go Okay, so if we go one by one in this, so the risk like dependence of limited number of vehicle manufacturer or vehicle models increases liquidity risk, as small market shifts could greatly impact production volumes. What does it mean? So, for example, I am an auto ancillary. I am producing only for Hyundai, and that too for a particular model. That particular model. For example, there's a new car launched by Hyundai in very recently called Alcazar. So if Alcazar volumes are not picking up, my business will get directly impacted. So my liquidity, because I've set up a manufacturing plant, there's a working capital that is there, inventories, people are there. So my working capital my liquidity gets impacted. So I'll have to understand, is this a risk that might be there? Yes or no? Then lack of adequate capital resources to meet the production increases. So there might be a car for which I'm producing. I'm the sole supplier, but my production capacities are fully blocked. I'll have to increase. I will need to increase the production capacity. I would require capital. So from where this capital will come? So these are the things that I need to understand how the company is reacting to this, or planned for these kinds of risk. Depleted talent pools, then failure of certain fragile tier 2, tier 3 component suppliers. So when I'm an auto ancillary, I may not be doing everything myself. There would be some amount of things that I would be dependent on tier 2, tier 3 suppliers. So they might be job work, there would be castings that would be done. So I need to make sure that the supplies from these is not hampered. So anything that is disrupting the production at my plant because of my vendors will indirectly impact my deliveries to the vehicle manufacturer. So again, I'll have to see whether this kind of risks are there. If they are there, if would there be an accounting impact or not? So these are the things that we need to consider to some extent. Then considering on the moving ahead on the inherent risks, so these are the business risks which we talk about. These for mandatorily may not impact your financial statements, but you may have to still consider them while you are auditing, so that if they have any financial impact, you may have an additional procedures around them. And moving ahead, if you see, I have linked it back to the financial statement account as well. So for example, difficulty in passing the price reduction. So we'll understand what is this. So demanded by the vehicle manufacturer. So when I was explaining understand the business, so this industry specifically, a very unique feature that is there in this industry is that I'm providing goods or supplying to only few vehicle manufacturers. It's not like if I'm producing, my customer base would be very large. So normally it is restricted to 5 or maximum 10 kind of a suppliers, what I have seen in my experience. So when the customers are so limited now, and that too are very large vehicle manufacturers, so they command pricing. And practically what happens in the auto industry is because of the demand supply conditions, or in an auto kind of a setup, they expect cost reduction from their suppliers. And when OEMs will expect a cost reduction from their suppliers, that would mean a cost reduction from an auto ancillary. So what they do is they being the sole supplier, they can command the prices. So usually when you go and audit an auto industry, you'll have to inquire whether there are any agreements wherein the vehicle manufacturers, wherein the auto ancillary have agreed to pass on the cost reductions to the vehicle manufacturers. So if this is the situation, this will impact if your the financial statements, because you'll have to create an accrual for such cost, and accordingly your inventories or revenues, your debtors will get impacted. So these are the things you'll have to consider when you audit an auto ancillary kind of a setup. Similarly, difficulty in passing on the significant increase in the raw material. So most of the times when you're an auto ancillary, your products would have one or the other commodity, and when your commodity prices goes up, you'll have to recover. You'll have to either absorb the rising cost or pass it on to the customers, the OEMs. Now, because you work on a fixed price kind of a contracts initially, enter into a PO and everything, and once you enter into a contract, after that, the commodity price, when you go into the market to buy your raw materials, the commodity goes up. You'll have to consider whether this will get recovered from your customer, or you'll have to absorb. Accordingly, your financial statements get impacted. So these are the risks that you need to understand from an auto ancillary kind of a company. Similarly, poor relations with the labor union can result in disruption. So if you remember, there were in few years back, there was a big labor unrest in state of Haryana in Manesar. So that was applicable to one of the very big, I would say, vehicle manufacturer. So similarly, if this gets impacted, this instabilities comes in, so your production will get impacted. Once the OEM's production gets impacted, the production of the auto ancillary supplying to those OEMs will get impacted. So again, it's linked. And if that is there might be the fixed cost that you'll have to bear, and accordingly, you'll have to factor it in while you are valuing your inventory or creating any provisions with respect to the labor unrest that is there. Another interesting thing that happens in auto ancillary kind of a setup is this: the vehicle manufacturers, when they launch a new car or a motorcycle or a two-wheeler, so they go out in the market to tender the auto parts that they will be required to making in that new car or the auto or the two-wheeler. When they tender for example, they're tendering a new tendering for a new car, so a headlight of a new car. So they will tender to all the auto ancillary that manufactures the headlights for a car, and they will ask them that they are coming up with a new model, and they require this is the broader shape that is there, but within that shape, give us a new technology that might be there that is not there currently in the market. So and then only the tender will be awarded. So they come up, all the manufacturer auto ancillaries that manufacture the lights will come up with their proposition to that OEM. So now when they come up with a proposition, they'll have to do some kind of a research and development activity. They will have to incur cost, manpower cost, or they would have some lab for cost that would be there. So from that perspective, where this cost will get absorbed, whether this will be recovered or not recovered. So again, this investment, whether this is recoverable or not recoverable, becomes a threat to these companies, because they work already on a very low margin, because whether the tender will be awarded or not awarded will be depending whether their proposition will be accepted by the OEMs or not. So these kinds of things you'll have to keep in mind while you're auditing an auto ancillary kind of a setup. So I'm if you see, my structure is focusing only on auto ancillary. So there might be other risk, general risk that might be there in a particular that would be there in a X business and auto ancillary business. But I'm restricting my discussion so that you are able to correlate with the products that we discussed in initial slides. What are the products that are being manufactured by auto, and what are the risk that is there in a industry like an auto ancillary industry. So similarly, moving ahead, inability to optimize, sustain prior reductions, restructuring in manufacturing, selling, and administrative cost, the lack of capital at appropriate terms. So these ancillaries, usually because they operate on low margins, they'll have to manage their working capital very well to have adequate amount of capital available to maintain their operations and everything. So if they are not able to, they will be ending up raising more debt. So you'll have to ensure how the entity structure, how their strategies are. Now focusing back to the inherent risk kind of things, difficulty in optimizing managing the supply chain distribution process may lead to disruption in just-in-time delivery. So as these auto ancillaries or the entire auto works on a just-in-time kind of a setup, because the vehicle manufacturer only does an assembly of all these products. So they ask for the products when they start manufacturing. So it's always just in time. So so OEMs maintain their inventory levels at a very minimum level, and they expect the ancillaries also to maintain the inventories at a very just-in-time level. So you'll have to optimize everything. So your results, your operations do not get disrupted. So you'll have to understand why this is a risk. There might be penalty clauses. If you delay the deliveries, the entire production plan gets hampered. So when you're auditing, you'll have to build an audit procedure to ensure there are no expectedly penalties or penalties levied that should be accounted in the books of accounts. So again, these are very, I think, not a very frequent things, but yes, you'll have to factor in when you are auditing an auto ancillary industry. Difficulty in negotiating the contracts. So with the vehicle manufacturer. So this again, including pressure from the vehicle manufacturer to match the China price. So basically, though there is an initiative from the government of India after PLI also to bring in to bring down the exports and start building capabilities within India, but vehicle manufacturers being very large in their size, they expect Indian domestic manufacturer to match the price that they are able to seek from China. So from that perspective, when you're auditing an auto ancillary, because they might be under pressure to match the prices at work at very low margins, you have to estimate and ascertain, are there any indicators of impairment? If there are, then you'll have to perform the procedures around it. If you see on the right hand side, these are the significant accounts which may get impacted, or the account captions in the financial statements that might get impacted due to this. Moving ahead, liability for warranty repair expenses incurred by a vehicle manufacturer if the costs for the recall can be traced to a faulty product. So if you see, this phenomena was not very common if you go 4 or 5 years back. So this has started gaining, I would say, significance in India because of the increased, I would say, focus on safety norms in India and more awareness, the government and more, I would say, implementation by the government as well. So these kind of recalls have started happening in India as well. So from that perspective, so you'll have to be very cautious about if any recall has been done by any of the OEMs, and if that has been done, if is your auto ancillary impacted? If yes, any cost that might come to you by virtue of that recall, because ultimately the product would have been manufactured by an auto ancillary only. So how your agreements are, how you have structured your cost, whether it will be borne by the OEM or will be borne by your company. So I'll just pause here so that you people are able to digest what I'm trying to say. So this is the most I would say important thing when you are auditing. So everything is important, but this will I would say set out the base when you design your audit procedures. What are the specific procedures that you need to perform to mitigate all these risks? Again, lastly, I think mostly we have covered. I'll just quickly run on this. So inability to meet the quality requirements of the vehicle manufacturer. So this might be a business risk, not an accounting risk, but you'll have to consider whether, because if this might be, there might be some kind of penalties you may see in the financial sitting on the financial statement, or delaying payments from the customers. Difficulty in developing partnership and JVs for an emerging market. So like I said earlier, these auto ancillaries, either you will find very small or very large players which are manufacturing mostly all the products. So how they have grown so big. So these so there's a I would say very common practice in an auto ancillary kind of a industry, wherein they have grown by the way of an inorganic growth. When I say inorganic growth, means by way of an acquisition, mergers within India, outside India, because normally the technology is lying with the Japanese or the German companies. So people, how they've grown is they have formed joint ventures with these companies to have their product launched in India, to supply to OEMs in India. So because earlier the even the luxury car makers were sitting outside India, now they have also started their facility manufacturing in India, within India itself. So they also expect to source from India. So this industry has grown massively in last, I would say, couple of years by way of joint ventures or the I would say setting out the manufacturing units in India by way of partnerships and everything. So you'll have to see whether your company which you are auditing is able to do this to grow, or they are restricting themselves to one or two products only. Lack of e-commerce capability will preclude doing business with some customers, as well as cause inefficiencies in supply chain vis-a-vis connected computers, security of network systems on which they are working. So probably you'll have to see how good your company is from this to the IT perspective. Global expansion, we have already spoken. Then again, inability to implement flexible manufacturing strategies, flex on both quantity as well as type of the products produced. Now, when you are setting when the company that you are auditing, so if you'll have to understand whether the plant or the manufacturing facility that they have installed, is it able to cater to only one set of customer? They might be they have set up a machinery or a production line which is catering to Honda today, but is it able to cater to Hyundai tomorrow? So you'll have to understand, because there might be productions the demands may be seasonal with respect to some of the models in some parts of the year. So you'll have to be very you'll have to understand whether the machinery are optimally utilized throughout the year, or they have that capability to I would say agility to move to another customer, another product without incurring any significant cost. So this will help you understand from the impairment test perspective as well, whether they have got an alternative use or not. Similarly, on the on the risk side, I think R&D we already discussed, but you'll have, but from the auto ancillary perspective also, you might see, you might think why R&D is important, but R&D is important because a lot more OEMs are also now dependent on auto ancillary units because they specialize in one particular product. So to perform some amount of R&D, so as to bring up new technologies and new products, so you'll have to be in the market all the times to cater to these OEMs. So I think these are the risks, and when you cater to those risks, your accounts in the financial statements, specific line items which you see on the third column, gets impacted. And once these gets impacted, you'll have to have adequate and appropriate audit procedures. I'll emphasize on this because once you identify the risk, you'll have to design procedures to mitigate those risks. So I think from the broader perspective, what we covered till now, I'll just pause here because to link everything what I'm talking today. So we understood in the first phase the how the auto ancillary key customers, again the regulatory environment in which these auto sector industries are functioning. Their I would say the how they are leveraged, what is the equity, what is the debt portion on sitting on the financial statement, who are their stakeholders, who are the owners, investors, what is the focus which is used for calculating the materiality consideration. And once we understand and identify the materiality, we understand what are the risks around this industry so as to identify the account captions which might get impacted when I'm auditing financial statements, and what are the account captions and what are the procedures I need to do. We'll see in the next section of my presentation what are the audit procedures to be performed so that I'm able to mitigate my audit risk to minimal. I'll just pause here for a minute, just digest what we have learned till now. So I'll move ahead. So when you go and audit, I think you are now able to understand what relevance of understanding the business, the setting out the materiality, and identifying the risk to perform a risk-based audit. Now you'll have to understand when we move ahead, what are the processes that are there within the organization. Now you will say, why I need to understand the process. As an auditor, we'll have to understand because we in India perform integrated audit. When I say integrated audit, you not only provide assurance on the financial numbers, but also on the processes that were there. When I say processes, so if you see on the slide, so there are balance sheet amounts on the prior period. And then there's a process of initiation, recording, processing, reporting of the current year transactions that results in the balance sheet amount that are appearing in the current year period end. Now, and these are the assertions that they get impacted by virtue of the process that is being adopted, and similarly goes to the income statement account on the above. So this is so the process, understanding the process. So when I say understanding the process, for example, the sales process is there. So an order, an agreement, a master agreement in an auto kind of a setup, there's a master agreement with the OEM that is there. Within that master agreement, it sets out the terms of supply that will be there. Once that is entered, after that, a purchase order on a is raised on the auto ancillary for the supply of the goods. Once auto ancillary receives this purchase order or the customer order, then they start their process of planning the production, buying the goods, buying the raw materials, then the manufacturing process and the lead time, assessing the lead time to ensure the deliveries happen just in time. So the entire process will have a lot of risk within those process, and there would be controls laid down by the management. Now in a again to summarize one process, because this is the most critical one, the sales process. So with respect to the sales process, you might have a risk that for example, the sale is not backed by appropriate purchase order. So the process will not start unless a purchase order is received from the customer, and that goes into your system, maybe an IT system that is there, or the process, or ERP that your client has adopted. It goes in there, and from there the production planning and everything happens. So you'll have to see somebody is approving that purchase order that is in line with the master agreement. Again, there is a production process that is reviewed and approved, prepared, reviewed, and approved by somebody in the organization, so that the production happens as per the customer order. Right amount of raw materials are sourced from the stores with respect to the production plan. That would be, again, there would be a maker and checker to ensure only the right amount of quantities is issued on the shop floor. There would be the production guy who will ensure the production happens as per the requirements of the purchase order. And there would be a quality check to ensure the goods produced are of appropriate quality. So these are the checks at every point in the process, so that the right goods which are ordered by the customers are delivered to them. Now, and the sales are booked. Now, from the financial statement perspective, this entire process will have various points at which accounting happens. So, for example, when the raw materials are purchased, you will account for inventory in your books of accounts. When they are issued, you'll account for consumption in your financial statements. When they are sold, you'll account for sales into your books of accounts. So, when to record the sales? Now, in an auto kind of a setup, in an auto ancillary kind of a setup, when you are supplying to specific customers, there is a couple of types of processes that are being adopted. So normally you will see all these auto ancillaries very near to the OEM manufacturing plants. So if the OEM manufacturing plant is in Pune, so the auto ancillary will be very near to the OEMs, maybe a kilometer or 2 kilometers away from the vehicle manufacturer, so that they can reduce the lead time to deliver the goods. And once the goods are delivered, GRN acceptance is given by the OEM on their website that is available to the auto ancillary. So I'll repeat, once the goods are delivered, it can be seen on the intranet portal, which is provided by the OEMs to their ancillaries, wherein they load their production plan, their orders and everything, so that they confirm that the goods have been delivered. And because these are big players, the credit terms also to pay back to these ancillaries, because they work on low margin, is very quick. So you'll see normally 15 to 20 days of the credit terms that is there. So the money churns in very quickly. So from the auditing perspective, when you are designing your procedures, you'll have to design these kinds of audit checks. We'll discuss in the slides to come as well, because these are the, I would say, some of controls, external or internal controls that are there, which helps you drive additional amount of comfort when you are auditing sales or auditing inventories in an auto ancillary kind of a setup. So the understanding, I think, initiation, recording, processing, reporting is very, very, very important. First to identify which are the processes that are being adopted by an auto ancillary, and once you understand which are the processes, within those processes, how these processes are being run, so that to ensure the reported amounts in the financial statements, be it balance sheet or income statement, are true and fair, so that you are able to give opinion on the financial accounts as well as on your ICFR report. Moving ahead, so when we talk about these processes within, so I said we'll have to understand what are the processes like. So if you see on my screen, the processes are like treasury processes there for cash and bank disbursement would be there, receipts would be there, sales to AR processes there, procure to pay processes there, pricing provisions and settlements. So this again is very unique to an auto ancillary industry only. You'll not find it in other industries. So like I said, the pricing, there are situations wherein the OEM come back to the auto ancillary and say, I need a cost reduction. Please provide a cost reduction of 2% annually. So kind of a thing. So you'll have to ensure the process, the auto ancillary will have a process around it to ensure appropriate accounting happens, accrual happens in the books of account. Similarly, there would be a situation wherein you, as an auto ancillary, goes or takes an order, and after you have taken an order, for example, aluminum castings is there. So the commodity price of aluminum has gone up, skyrocketing once you have taken the order. So you'll reach out to the OEM supplier stating that this is the price increase that you command from them because of the rise in the raw material prices once you have taken the order. You may get it, you may not get it, but the process would be there to ensure right amount gets recorded in the books of account. Inventory costings and the cost of sales, this is another important process that is there in auto industry. Purchase of property, plant and equipment. You'll see in the slides to come also, there are some unique arrangements in the auto ancillary kind of a setup, wherein you will see when an OEM comes to a auto ancillary, they will come up with a product. Now, to manufacture that product, they may supply the molds or the tools themselves, or they may ask the auto ancillary to manufacture those tools, or to buy or to source these tools or molds from outside. Now, how these will get accounted is another interesting thing in auto ancillary. We'll learn in slides to come. But yes, the process holds a lot of significance how these are being accounted. The payroll process. There are labor unions in an auto industry. They might be there in other industry as well, but because this is there, you'll have to keep. You have to understand how this process functions. The financial statement close process is there. And then last, again, very unique to auto industry is estimation warranties, like we discussed just before. So you have identified one risk called when a product recall can happen. Now, to ensure that product recall liabilities are accounted in the books of accounts, there's a process called estimation of warranties process that is there led by the auto ancillary company. So these are broad 10 what from my experience I could list down on my slide today. So these are the broader, I would say, key processes that might impact the financial statements which you are auditing. I'll just pause so that you can just digest what I'm saying. Moving ahead, so once we have understood the process, within those process, we identify risk and what are the controls laid by the management to mitigate this risk. Why it is important to understand these risks? Because you'll audit these these controls to opine on or to draw comfort on the financial numbers that are being reported. If I just go back on the previous slide, if you see, I have got the numbers on the prior period, and through the process, they convert into the numbers of the current period. So if the process has some risk and those risks are not mitigated, the numbers in the financial statements may get wrong. So when you're performing an integrated kind of an audit, you'll have to understand what are the risks that are there, and you might be doing it for the years, because it has been almost 6-7 years when the integrated audit started. So from that perspective, I think you are well versed with what are the risk and the control. But just to keep it restricted to, I just wanted to give you a flavor how these what could be the risk. And like, for example, all customer shipments are not recorded in the proper records. Now, when I say all shipments are not recorded, then probably there are you will perform some controls like revenue and margins, because normally you work on similar margins throughout the year. So if your margins gets erratic trend, so you might see that there might be some sales that is not recorded in the books of accounts. So, or there might be agreements. You'll identify those agreements based on which whether the ownership has passed or not. So you'll have to understand what are the agreements with the OEMs before ensuring they have been recorded appropriately in the books of account. Similarly, fictitious or duplicate sales are booked or not. And invoices reflect incorrect pricing. So for example, if you recall what we discussed about the price increase decrease, if you see on my screen on this In case of modification in sales price, revised POs is received from the customer based on the working of price variation to be given to the customer, which is prepared by finance executive, reviewed by AM finance, and approved by the unit finance head. So there's a maker checker when a modification price happens. For a price variation, supplementary invoice is generated by the authorized person, and system is configured to recognize revenue automatically on generation of invoice in the data ledger, so data GL. So these are the these are the controls that are laid by the sample control that might be laid by your client on pricing provisions. Okay, I just wanted to reflect you on one of the examples. Moving ahead, now these are some of the substantive procedures that are there in an auto ancillary industry. We'll spend some time here because these are very important. So now be with me. So we started with again, to recap of the 4 sections that we have already covered. So the first one was the understanding the business of an auto ancillary, which produce numerous products that goes into the vehicle, like your car, like your car seat is there, your headlight is there, wipers are there, your small engine castings are there, your braking systems are there, steering systems are there. So if your client or your audit is manufacturing one of those products, for example, for Honda, they are manufacturing the seating system, so or they are manufacturing the steering system for your for a particular model of a Honda. Now you'll have to understand how Honda is performing, because based on which or the particular car model is performing. So for example, very recently, if you know, Honda launched in last year, in the beginning of the last year, they launched Honda Civic, and within a few months they had to close for any XYZ reason. Now when they have launched Honda Civic manufacturing in India, now there would be some auto ancillaries who would be catering to Honda. There would be specific auto ancillaries auto ancillary would be catering to Honda. Now when a particular ancillary is catering, and for a particular model they are catering. So for example, they are making seats for Honda Civic. Now the seat of a Honda Civic will not fit in Honda City or any other car for that matter. They have a particular design, shape, fabric, and I would say the structure is there. So to manufacture that seat, there would be a mold that would be there. There would be a manufacturing line dedicated to it that would be there. The manufacturing line still might have an alternative use. You'll have to assess. But what I'm trying to say is, if you are into an industry which is catering to a few customers only, and that too to a few products, within those few customers also only few products are there. That's not you are not catering to the entire set of Honda cars, or you're not catering to entire set of Maruti car portfolio. So again, your products are, your manufacturing facility will be very specific to those products. When it is so specific to those products, if their decisions, OEMs, based on their decisions, your plant will get impacted. Now your business plan will get impacted. Once your business plan gets impacted, there triggers the impairment risk. So once these are there, now these changes are started happening very frequently. Now you recently would have heard Maruti is discontinuing diesel engines. So they decided, then they took back the decision, but yes, the decision was there. Similarly, Europe has banned diesel cars. India has said they will move to electric cars by 2030. So the 30% of the cars will get switched to electric cars. So this technological changes, regulatory changes will impact the business of the auto ancillary or the vehicle manufacturers, and consequently auto ancillaries. So you'll have to be very vigilant when you are auditing an auto ancillary, whether there are any kind of impairment indicators due to which your manufacturing facility may get redundant, will not be able to produce what they are capable of producing. So you'll have to provide for impairment law. You'll have to ensure your client is able to provide rightfully in the books of accounts with respect to the impairment losses that might be there. Now, to identify these kinds of once you have identified this impairment testing as a indicators of impairment testing as per Ind AS, now you'll have to assess the level at which the company performs at impairment testing of these assets, including how the company has defined the CGU, and ensure analysis have been applied accordingly. So to perform, you'll have to identify whether they have identified right CG or not. Consider need for differentiating by geography, product line, model, platform, module. So if you have gone to an auto ancillary, you'll see the lines, the specific lines to specific customer to a specific product. So you'll have to see what you'll have to identify what is the CGU, what is the particular asset that might get impaired, so that your accrual is done correctly. Then you'll have to assess. Once you conclude there is an impairment indicator, you identify the CGU, you have the impairment computations done by the management of that company. Then you may assess whether, based on the complexity, whether you need to engage with an expert to validate the assumptions or the model that is being used by the company. So we as an auditor, we may not be valuation experts, but if you don't have that abilities, you may hire a auditor expert for that perspective. Once you have done this, then you will have to perform a sensitivity analysis of the assumptions that are used in the impairment testing model by the client. For example, discount rate or the WACC rate is there, weighted average cost of capital, for that to assess whether there is an impairment or not. So if they have taken an X amount, so you'll have to perform a sensitivity. So when I say sensitivity, so for example, you've taken a discount rate or a WACC, weighted average cost of capital, as 10%. But what if the rate goes up and says 11%? As a WACC, or it goes up to 12% or 13%. So whether there would be an impairment at those levels or not. So you'll have to understand whether the model that is being prepared by the company is good enough, has enough headroom to absorb to the normal fluctuation that might be there in the assumptions, because it's a futuristic thing. So you are taking a business plan from the management. Based on the business plan, the management would have done a present value of the future cash flows. So there's all assumptions that are driven. So for example, they have given you a model wherein the revenue growth is shown as 30%. In past, the revenue growth has been only 5%. So in what scenario, why the management has taken an assumption of 30% needs to be challenged by us as an auditors, whether that model is appropriate, whether it will be able to hold 30% revenue growth. Is there any plan for export, any new model that for which they have already got into an agreement? So you'll have to factor all these factors while you are performing an impairment testing. And now, why it is unique to an auto ancillary kind of a setup? Like I said, in any industry other than auto, you might not find it very frequent, but because of the significant regulatory changes and the decisions that are being taken by global organizations, or I would say the regulatory changes that are being implemented by the companies globally with respect to the climate change that is happening, to bring down and to reach to a carbon neutral level. So this industry is the first, I would say, is getting impacted by virtue of this. So and because of this frequent multiple changes and different variety and different level of changes worldwide, so you'll have to see what are the products markets that you're catering to and whether there are impairment indicators or not. So I think from that perspective, this becomes very frequent exercise in an auto ancillary kind of a setup. Just pause, just digest this, and I'll move forward from here. So so moving ahead with respect to another account caption, that is inventories. So these procedures are all linked to the risk that we have discussed. Again, I'm now discussing what are the procedures that you need to perform around those to mitigate the audit risk to minimal level. Similar to impairment testing of the property, plant, and equipment. So moving ahead and seeing the valuation of inventories and the related provisions. So if you see, very recently, India moved to BS6 norms. So So again, if you are an auto ancillary and you are manufacturing for a particular product or a customer and a particular product on a BS4 norm, so the inventories that are pertaining to BS stage 4, Bharat stage 4 norms will get impaired or will have to be considered as obsolete, because you, as an auto ancillary, will not be able to utilize those inventories to manufacture the products henceforth, which will be used in BS Bharat stage 6 norms. So from that perspective, any unsold stock that might be there will have to be provided for in the books of account. So you'll have to assess whether any such stocks are there or not, and this is a regular exercise. So this Bharat stage 4 and 6 may have happened a year or so before, but now also, whenever, because of the changing regulatory environment, you'll have to assess the inventory levels that the auto ancillary is holding, whether that is sufficient enough to cater to the only to the recent demands. They are not holding anything that is beyond acceptable levels. So you'll have to perform various, like inventory holding period, the since when or the aging analysis, to understand how long the company has been holding to the stocks and whether anything that needs to be provided for, though not specifically required. But if required, you may engage with some experts to, when there is a complex aging or the product portfolio is very large, various so if it is a smaller auto ancillaries catering to only few products, few customers, few, I would say, OEMs, and that too with a few products, you may do it by yourself. But if it is a very large auto ancillary serving to multiple customers, very large product portfolio, each portfolio and product may have a different economics altogether. It might, one of the products may be used for an export market, some may be used for an internal domestic market, some may be used for a luxury car, some may be used for I would say a mass production cars. So you'll have to understand before I would say ensuring that your provision is adequate or not, and if required, experts may be engaged. And again, because it's an estimate, you as an auditor, you'll have to perform a procedure with respect to sensitivity analysis of the assumptions that are used in your provisions that are being made by the management, to ensure they are able to absorb any normative fluctuations that are there, and there's no anything which is lying only on the marginal lines, and there might be additional provision that would be required in the books of accounts. Moving ahead, with respect to the another unique thing that is there with the OEMs is there, that OEMs, because they're largely dependent upon the auto ancillary industry, so they enter into contract with the auto ancillary, considering the stiff competitive environment, to give price reductions in an agreed manner over the tenure of the supplies. Like I said, usually when you are auditing these auto ancillary kind of setups, so you'll find arrangements with the large OEMs wherein they would have directed the auto ancillary to give price reductions over the period of 2 to 3 years. And that two price reductions is already pre-agreed, 2% or 3%, whatever percentage price reduction they would have asked. Now, to maintain this, because they are also having a stiff competition within their vehicle car manufacturer, so they ask the cost reduction from the auto ancillaries. Now, auto ancillaries, to cater to these cost reductions, needs to bring in efficiencies in production and whatever they do want to do from the business side. But from the accounting standpoint, this cost reduction will have to get accounted in the books of account as a price provision. So when you're auditing, you'll have to inquire about such arrangements from your client, and what is the completeness of these arrangements, what is the documentary evidence wherein they have agreed contractually with the OEMs, what are the percentages that they have agreed. Now, they would have agreed, there would be a master agreement, then there would be a specific purchase order, I would say specific arrangements for a particular model and or the particular specific to a particular product within that within, you might be supplying 2 or 3 products to a OEM, but the cost reduction might be applicable only on the one particular product. So you'll have to identify these kinds of arrangements that might be there and obtain a calculation of the accrual that would that the company would have made in the books of accounts. And once you obtain these, you'll have to perform a mathematical analysis around these calculations, correctness of these mathematical calculations, and correlate it with the underlying agreements, communications, confirmations that might be, or a reconciliation with the customers that might be there. Because sometimes these are given as a part of or a period of 2 years or 1 year, whether that period is over or not. You'll have to understand and ensure appropriate accruals have been done in the books of account or not. Similarly, another unique feature that is there in the with respect to auto ancillary industry is the price increase that they command from the customers. So one is the request from the OEMs to the auto ancillary to give a price reduction. The other one is with respect to the price increase that will be requested by the auto ancillary from the OEMs. So once they enter into contract, post that, because of the rise in the commodity price or any other factor that might be there, they may approach the OEMs to requesting them to give a increase in the price because of the factors that has led to cost increase in the cost. So you'll find a very common and a routine process in a auto kind of a setup. Unlike any other industry wherein the customer gives an order and the price gets fixed, and from there the accounting happens. In this, the price remains open, and once a contract is received at a price, there's still possibility of very frequent changes in the price. So as an auditor, we need to be very cautious and very informative, or I would say very well versed with such kind of arrangements that are there. There should be a proper documentary evidence to or auditable evidence, and very qualitative auditable evidence, I would say, to ensure appropriate accruals have gone into the books of accounts. But because this will also will impact your profitability of that your company. So and when these kinds of adjustments over and above your contracted price happen, so there should be a very strong and qualitative auditable audit evidence based on which these price increase gets recorded in the books of account. So for this, these are the procedures probably one should adopt, like inquire entity sales and marketing to obtain information related to any ongoing or a pending discussion with a key customer. So any inquiry, you'll have to inquire with the management, anything that is going on, any discussions that are going on with the customers. Verify the documents and evidences. When I say verify the documents and evidences, again, the arrangements with the pricing should be auditable. Obtain the basis of provision estimates, including the subsequent settlement details. Now, suppose you have gone and asked for a price revision of X amount. The customer has approved for Y amount. Now, on Y, which are the products that are getting impacted for which period? Because this price changes happens at a per piece rate. Now, for which period they are accepted to give price increase, you'll have to understand and see the documentary evidences around it, and ensure the accounting is done from that period only. Inspect the signed agreements with the customers, other available evidences to assess the basis of provision. Inquire the in-house legal counsel to obtain information about ongoing dispute with the customers, if any, that might impact the estimate on the accruals. Verify the receivable aging to identify long outstanding receivables in cases of customer deduction, and analyze the reasons impact. Another way to find it, there might be long pending dues, that because this industry normally you'll find dues getting settled within a period of a month or so. But if something is going beyond that, you might engage with the credit settlement teams why this amount is not being paid by the customers. There might be a dispute, anything that needs to be accrued in the books of accounts. So So anything that is beyond the normal credit cycle will have to get investigated, because they are very good in, I would say, unlike other companies wherein there might be some delays in receiving the payments, but in auto kind of an industry, you will see payments and collections happening very on time. And normally people also enter into factoring kind of an arrangement. So we'll discuss in another slide to come. So probably from that perspective as well, so the cash flows are very smooth, and if they are not happening, then there might be some issues. I'll just pause here, because these two, price increase and price decrease, these are very, very unique and very, very common in an auto ancillary kind of setup. And we as an auditor need to perform good enough audit procedures and seek good qualitative audit evidences to ensure appropriate accounting is being done to opine on the financial statements. I think moving ahead, I think this we already discussed when we were discussing about the understanding the business of an auto ancillary. So there are a lot many initiatives that are being taken very recently and in the past as well with respect to the auto ancillary. And with respect to these, I think the initiatives, the accounting with respect to the government grants needs to be done. Now, this being an off-balance sheet kind of an item, off-balance sheet, I mean, it is coming from an agreement with the government. It might take some time for the cash to be collected. So the accounting needs to be done on an accrual basis when the reasonability is or certainty is achieved by virtue of an agreement or eligibility certificate being received by the company. So once these happen, the company needs to start accruing the benefits when they are eligible for the claim. Whether this being appropriately done, the maths around the claim is right. It is as per the terms and condition of the scheme that is being given by the government or the MOU. So from all these perspectives, whether the filings now, whether the positive steps have been taken by the company to file the claim, correspondences with the government to ensure the claims that has been accounted in the books of accounts are right or wrong. So again, this you'll very commonly seeing MSIPs and the PLI being getting recorded now in these auto ancillaries. I think this is another unique feature which I told you earlier. So what happens is whenever an OEM comes to a auto ancillary for a product, so they will ask they may provide the tools themselves, the OEMs, to enable the component supplier or the auto ancillary to manufacture the product, the required product, or they may ask it to source directly from a third-party vendor or manufacture the tool themselves. So they can manufacture the mold and tools themselves also, auto ancillaries. So all the situations will have a different accounting treatment and the different auditing, I think, evidence that would be there. So you'll have to understand how the terms are structured with the OEMs and perform the procedures accordingly. So for example, if the toolings are recovered through per piece price, so they may ask to manufacture the tool themselves or procure it and recover the price of the tools from a per piece kind of a thing. So what are the agreements around it? Obtain these agreements, verify the amounts capitalized do not exceed the amounts outlined in the reimbursement agreement. I'm able to I'm recording only that I'm able to recover. Recalculate the current period capitalized cost to verify the reasonableness of to validate the remaining output capitalized are recoverable based on projected volumes. So whatever I'm capitalizing, I'm able to recover through the projected volumes. Judgmentally select a sample of program and obtain a comparison of cost capitalized versus actual piece price reimbursement that are being received. So there might be a possibility wherein you have capitalized a mold. Now you're not able to get the quantities, adequate amount of quantities from the OEM, basis which you are able to recover the cost you have incurred. Now in such kind of situation, there would be again impairment trigger with respect to such tooling. Then you'll have to assess whether you'll be able to recover the cost of this tool which you have incurred. If not, then you have to impair it. And this again depended upon the performance of the launch of the car that has been done by the OEM or the two-wheeler that has been done by the OEM. So you'll have to be very vigilant as an auditor when you are doing this industry, what are the models have been launched, whether they're successful, not successful, whether your company is catering to those models or not. So again, from the data point also, from when you are researching about that company, you'll have to keep yourself well versed about the industry. There might be a situation wherein a tool has been bought by Auto Ancillary and it is in the upfront is bought by the OEM themselves. So in that case, is there any gain that needs to be accounted in the books of account or not? So all these things will typically depend upon the structure of the arrangement that is there with the OEM. These are the procedure wherein the tool is not provided by the OEM, but you buy the tool yourself. And then you manufacture the tool yourself and capitalize it. So what should be the cost that should be capitalized? Whether anything that is not capitalizable has been capitalized, you'll have to ask for a breakup of the cost that has been capitalized. Then what is the cost to complete that might be there, whether you'll be able to recover this amount from the projected sales or not. Is there any impairment triggers? All these things, I think, from the auditing perspective, you need to cater. This is again interesting, I think, factor in a auto ancillary kind of a thing. So, like we discussed earlier, so to manufacture a particular product, so when they tender, when a company OEM vehicle manufacturer is coming up with a new model of any car or a two-wheeler, so they reach out to the auto ancillary to tender the products that they can manufacture, and they give a broader, I think, the model that they require, but within that model, what are the technological advancement that they can give considering the current available features in other cars or the two-wheelers, or anything new or that has not yet come up. So they need to research, they need to develop new products on an ongoing basis. Now, whether this R&D that an auto ancillary does, whether this is good enough to be capitalized as per Ind AS 38 is a area where auditor needs to keep his eyes and ears open, or put I think use his professional skepticism to ensure right cost gets capitalized if it is capitalizable. So again, I'm not going into the detail of Ind AS what are the criteria to capitalize the cost, but from the auditing perspective, the auditor needs to see whether these are research kind of an expenditure that the company has incurred, or whether the development cost has been incurred. What is the ability? What is the whether the company will be able to seek the tender? And most of the times, what I have seen personally, these costs are fail the test for capitalization. But yes, in few cases, you might see these costs being capitalized when you have already when there's no tendering kind of a process, and when you are able to demonstrate that development has taken place. So probably you have to be very I would say inquisitive about these costs that are being capitalized by the companies in auto ancillary sector. And similarly, once you have capitalized it, so whether so you might be depreciating it over the period of 3 to 5 years, whatever the period you would have decided. But whether that car is being sold, whether you are able to recover adequate amount what you have incurred in the initial setup of that product. So impairment testing holds a lot relevance in the auto ancillary industry, because products fails. Sometimes it takes time for a car to get adapted by the public at large. So the quantities may come up slowly. So from that perspective, I think impairment testing of maybe property, plant, equipment, or intangible kind of an asset or inventories holds a lot of importance in auto ancillary sector. And you can see almost I think 3-4 slides on this in my presentation today. I think depreciation assumptions, because you need to assess useful life of the asset. So in an auto kind of an industry, you'll have to assess what is the right life over which your asset is expected to be used. So there might be different, considering the different market segment, different product segment, different, I would say, vehicle segment. So you'll have to, and trust me, it varies. So there might be a mold, you might be depreciating within a period of 3 years or 4 years in a particular market segment, market product segment, or a customer segment. But the another mold may get depreciated in 5 years. So you'll have to assess what is the longevity of the product which you are servicing, what is the past trend, what is the expectation. So based on which the assets will get depreciated. I think this one is the last one. So these were the, I think, product recall. So product recall is another, I think, key commercial obligation on a auto ancillary industry. So because if a product in a car fails, so if you recall very recently, one of the large OEM has done recall of cars because of the malfunction in your airbags that are there in the car. So because of this, the auto ancillary which would be manufacturing that airbag will also get impacted, because they would have some product liabilities with the OEMs. And if so, they will have to ensure appropriate accruals are there in the books of account. Now, the car is sold today, recall may happen 3 years later. So you'll have to ensure, based on the past trend estimation, what is the likelihood that there would be a cost that might come in that much amount of period. So you'll have to account in line when you make the sales. So they might not, so you'll have to make it through the past trends and carry a provision in the books of accounts based on your assessment that would be there in the books of account, how many product fails, how many percentage of the product that might get failed based on the past trend. So you'll have, this is similar to warranty that is there in other industry, but normally what happens in other industry, if a product fails, that only product gets replaced. But in case of auto, if a product is getting failed, the entire batch will get replaced, similar to a pharma kind of a setup. The entire batch will have to be recalled and replaced and changed. So you got from the OEMs as well as the underlying auto ancillaries will have to carry a provision to cater to these the liabilities which might happen in the future. So for this, the procedures that might be there on the right hand side, if you can read, obtain a complete list of warranty recall obligations to the customers, including car manufacturers, assess the reasonableness of the warranty or the recall provisions, inquire if there has been any change to warranty agreements, inquire regarding any amounts recorded for recourse from sub-suppliers and warranty sharing agreements, test the completeness and accuracy of the payments or the claim data used in the warranty, test the completeness of the accuracy of the shipment volume data. So you'll have to perform all these procedures to ensure a right amount of accruals are being done in the books of account. These are all similar purchase and contracts and rebates. What are the procedures that you will perform at the with respect to the auto industry? This one is again interesting, compliance with the legislation. So like you see, emission norms are changing, I would say, on a very frequent basis, and globally different emission norms are being, I would say, different laws are being prescribed. And because auto ancillary not only service to domestic suppliers, but also to the global suppliers, and to some extent, I would say, global OEMs, which are following global norms. So that might get impacting, that might impact the local productions as well. So these auto ancillary will have to adapt to these changes that might happen in the emission norms, and there might be linked liabilities as well with respect to the emission norms, whether those liabilities are being provided for or not. Plus, there are, I would say, pertinent tax issues in auto kind of an industry. Very recently, one of the issue that came up in an industry wherein one of the large suppliers was asked, sorry, one of the auto ancillary with respect to one of the large OEMs, where all the auto ancillaries were asked to include the designing cost in their sales price to when they bill it to when they compute GST on the output liability. And there was a demand on all the auto ancillaries servicing to that OEM, wherein the design cost was not being billed separately. So they were asked to include and paid GST on that amount. So these kind of issues keeps coming up in these kind of industry, wherein They are more limited OEMs and large auto ancillary. So one, if it is applicable to one ancillary, it will be applicable to all the ancillaries. So these kinds of issues are coming. So you need to, as an auditor, ensure if any provision is required or not, or any or whether they have been disclosed appropriately in the books of accounts or not for the reader of the financial statement. So again, very important from the industry perspective. I think from the revenue perspective, we already discussed that you can get an excess from whether the goods have been delivered or not, because they follow a just-in-time approach or not. So very good, I think, control that is there in industry. You can, as an auditor, get a comfort whether goods have been delivered, and subsequently, by the time you deliver the accounts or sign the accounts, I think financial accounts, the money gets collected. So good amount of comfort that is there, which can be built in to ensure there is no overstatement of revenue. The risk gets mitigated quite well in this kind of a setup. And I think linked to this only from the procedure perspective, the estimates that are there, like we discussed, provisions, pricing provisions, impairment in investment, depreciation, provision for warranty and litigation. So these are the key estimates that you as an auditor might factor in while designing the audit procedure that are there. Whether you need to engage any expert or you have inherent capabilities to test these estimates and have adequate auditing procedures around them. Yeah, so I think from the auditing perspective, we have covered how what an auto industry looks like, what are the risks in this industry, what are the specific controls that are there, and what are the specific auditing procedures we as an auditor need to design around an auto industry. Considering all these, I just quickly captured the listed companies and how they have reported the key audit matters in specifically in auto ancillary industries. And if you see, these are all revolving around valuation of inventories, assessment of recoverability of deferred tax, impairment assessment of PPE. This we discussed in our slides also. Related party transactions also we discussed. Revenue recognition, including price variations, similar to what we discussed. Significant estimate and judgment relating to capitalization of property, plant, and equipment. Significant estimation relating to litigations, claims, and contingencies. Recording of price adjustments, various price liabilities, and impact on recognition of revenue. There's some demerger, then derecognition of debtors with respect to the trade receivable factoring facilities. Impairment assessment of, again, investments. Derecognition of trade receivables under factoring. Then there's merger, then revenue recognition. So if you'll see, the larger companies, very large size companies also are focusing, auditors have focused on these kind of risk in this auto ancillary kind of industry. And considering all these, I think risk, once you design your audit procedure, I think you will be able to minimize your audit risk. I think I think from the holistic perspective, this was what I wanted to cover today with respect to the auto ancillary industry. I think Anilji, I'm done with my presentation. Any questions that might have been received? I'm happy to answer. Anilji, you are there?
Can you hear me?
Yes.
Yes. Thank you so much, sir, for such a detailed and wonderful deliberation. You have covered all the aspects relating to the auto ancillary industry, relating to the audit part. We have received certain questions. If you permit, can we go ahead with the questions?
Yes.
Yes. So first question is, in the auto ancillary industry, most of the times the significant risk is identified in revenue, considering the fraud risk. In such cases, even though we perform the test of controls, we have to go for the test of details. In such cases, the sample size normally turns to be very huge. If we cannot perform any other substantive procedure, in your view, what should be done for reducing the number of samples for test for details?
Okay. And who has asked the question? Do we have the name? If I can.
Pardon?
Okay. I was asking if I know the name of the person who asked, so probably I can answer him directly.
Name is not yet
Okay.
mentioned, sir.
So to the anonymous question who asked, so I think whenever we do any audit, so underlying presumption is that we consider revenue as a fraud risk. So this is as per the auditing standards as well. So whenever we design our procedures, so there are two types of procedure, like you said also, as a test of controls we do and test of details that we perform to mitigate that the risk around the overstatement of the revenue or the as a fraud risk. So if we have performed a test of controls, your sample size when you're performing a test of details automatically gets down. You can reduce your sample size when your controls are working effectively vis-a-vis a situation when controls are not working effectively, wherein your sample size would be to a greater extent. Having said that, in an ancillary industry, because you are able to get good comfort around the controls that are there on cutoffs, specifically which I covered in my presentation as well, you can easily see whether as a acknowledgement from the customer on their I would say the websites wherein you can go log in and with the client and see whether goods have been delivered or not. So and the money has been collected subsequently by the time people sign the accounts. So this gives a lot of additional comfort wherein you can factor these in your controls and definitely reduce your test of detailed samples.
Yes. So quality of the suppliers by the OEM should be approved within reasonable time. Sometime it happens when there is problem in production schedule of OEM, they reject ancillary supply on quality basis. If FIFO is not being followed, the changes of scrap or unsellable items are there. So kindly elaborate.
Okay, so if I understand your question correctly, so you are saying there are rejections by the OEMs because of their own delays or stoppages in the production that might be there, because of which there are rejections and there is a scrap vis-a-vis in the auto ancillary sector. So in such a situations, probably when you are creating provisions on inventory, accruing the provisions on inventory at the year end, you need to factor in all these the trends which have been there for a particular product for which rejections have been happening for your OEMs because of the quality issues. Probably when OEM has rejected, first of all, as an auditor on the quality basis, we'll have to assume that the rejections were rightfully done by the OEMs unless there is a legal dispute around it. So once this trend is there, probably based on the past 2 to 3 years of trend, you can apply a percentage on the closing stock on the reporting date to calculate the provision of inventories to ensure appropriate accruals have been done or not.
Yes, sir. So one member is just asking your view. Can you please share your view on the Ford exit from India and its impact on auto industry as well as important aspects that we should consider in an audit?
Yeah, so when Ford decided to exit from India, it was a big decision. Probably uh, such a large pair from an American manufacturer. This came up as a surprise because lot many ancillaries would have been connected to that OEM, as well as the manufacturing plants and the people, employees, everything would have been there. But like I said, so these are the big exits that would have happened in our history. But these risks, probably as an auditor, we may not be able to cater about the big exit. But yes, product failures or when you are auditing, when you are starting auditing an auto ancillary, we have to be very, very vigilant about this industry, whether these cars model which my client is servicing are being sold or are being well accepted by the public at large or not. So probably there is a car that has been recently launched a couple of months back, but has not received a response, and my auto ancillary is producing that car. So probably I'll have to be very vigilant about the impairment around the inventory that I'm holding, or the manufacturing plant that I would have set up. So probably from that perspective, we'll have to be very, very vigilant. And when Ford exited India, so there's a lot of ancillary which got impacted. Also, which we noted in few experiences, though they were able to meet, or they have compensated adequately to all these ancillaries and and also to the, I would say, from the recoverables perspective as well. They have also cleared their dues, this being a global organization. But yes, this impacted society at a large, because the people lost their jobs, or the one of the cycle that got missed on the dealers got closed. So a lot many impacts from the society side happened.
Yes, sir. Sir, in auto industry, majority of the accruals for pricing provisions are done basis the management estimates, wherein the corroborative evidence from the third party is not available for the audit. In such cases, what audit procedures to be you recommend?
Yeah, so like I said in my presentation as well, so the pricing provision is a very common phenomena in auto ancillary kind of a setup. The command, there would be a request for the price increase, and corresponding there would be a price reduction request. So both price increase and price decrease are there. But to have for us and as auditor to opine on the financial statement, we need to have a qualitative and auditable evidences, be it correspondence with the customers. You may go and seek confirmations from the OEMs wherever you do not have a qualitative evidence to support the accruals in the books of account. So probably we as an auditor should have, I think you alternatively can seek a confirmation on the numbers that is there, so that to ensure the appropriate account book amounts are being recorded in the books of account. Many times, by the time the accounts are being finalized, the agreements may not happen. So, to alternatively, you may have a confirmation from the OEM that this is a claim which they have approved, for which PO needs to be raised. So, at least you have a good amount of independent confirmation to support the accounting that has been done by the client.
Yes, sir. So last question. Obsolescence is very common in auto sector. There's a great need of physical verification of finished stocks and raw material very frequently. I think it needs a bigger discussion. So kindly put some light on this, sir.
So, what we have seen in past, so they maintain very optimal level of inventories. Unlike unless it is a small player which are not able to manage their working capital. Personally, I've seen good amount of inventory management in auto ancillary specifically, because they maintain very, very, very specific optimal level of inventories, and that too if some replacement or I would say tools inventory are being maintained for the future productions or the models that are expired, but they have to give it to the aftermarket or manufacture goods that are required to be that OEMs have asked them to maintain. So for that they are being compensated by the OEMs to maintain the inventory, so that if after 10 years somebody needs a headlight of a Maruti 800, so they are able to manufacture in the aftermarket and deliver it to the customers. So to that extent, inventories might be there, but that is again as per the trend of the industry that is there, may not require any provision. Yeah.
So thank you so much, sir, for sparing your valuable time, and you have justified with your presentation and very detailed presentation and covered all the aspects relating to this audit relating part relating to this industry. And I have gained a lot knowledge through your deliberation. Hope our members have also gained a lot through your deliberation. So on behalf of AASP of ICI, I extend my heartiest thanks towards you for sparing your valuable time. Thank you so much. Thank you.
Thank you.
Thank
Thank
you.
you so much.
Thank you. Thank you.